With all the focus on the mega caps, a lot of great quarters, well, they end up getting ignored every earnings season. Take Tanger, the real estate investment trust, formerly known as Tanger Factory Outlet Centers. They're the largest operator of these great open-air outlet centers in the country. I always like this one because it's the kind of retail story that appeals to more bargain-oriented consumers. Sure enough, when Tanger reported last week, it delivered a nice top and bottom line beat, with management giving us a very strong full-year forecast. This has become an impressive growth story with accelerating lease momentum and some big new properties coming online, like the opening of their new Nashville location. In response, the stock jumped more than 3%, but if business stays as strong, I think it have more room to run. This has long been one of my favorites. So let's check in with Stephen Yalof. He's the president and CEO of Tanger. Get a better sense of the quarter and what comes next. Mr. Yalof, welcome back to Mad Money.
Great to be here.
Okay, so Stephen, last time we talked to you, the excitement was Nashville. I didn't know that there were two other villes coming. Nashville, Asheville, and Huntsville. This is where people are going now. These are destinations for the rest of the country.
That's right. You know, we're looking for markets that not only have great permanent population and growing population, we're also looking for places that have great tourism. And Asheville, what a great tourist city. Amazing. So we're excited to be there.
Now, can you generate, and are there enough people with enough incomes to be able to make it so the stores do well?
Well, you know, first of all, 12 million people a year coming through Asheville, which is a pretty staggering number. Biltmore, which is this unbelievable draw, a huge attraction, over 1 million people a year just coming to Biltmore alone. So people are coming for the food, they're coming for the music, they're coming for the great attractions, they're staying for the shopping. And, you know, don't forget, it's a great big local catchment area there, so we get to serve as that local mall.
Now, in the old days when we went to outlet malls, it was always just kind of it was the stuff that nobody could sell, and it was the stores that nobody wanted in the mall. I am looking at your names and thinking, these are premium companies. Why are they going to Tanger?
Well, the brands are getting better and they're getting stronger.
Right.
You know, with online shopping, it's important for a lot of these brands to also have a full price presence. And with a lot of the excess inventory, outlet's a great place to clear, regardless of category that you're shopping in. So it's a great platform. It's a platform that's growing. And we have a lot of new tenants that are entering the business through our channel, and we're growing them throughout our portfolio.
I also find, having just been caught in Florida in the rain, when when it's raining where I am, it's Riverhead. When I'm raining with my other side of my family, it's Rehoboth. These are places where there is nothing to do if it's raining other than to go to you. I mean, is that playing out? The retailers must love it.
Well, you know, we hate to pray for rain on a sunny weekend during the summertime, but when the clouds come out, so do the cars. And that's an amazing thing in a lot of the geographies where we are. Myrtle Beach, Hilton Head, Rehoboth, Daytona. We love beach communities. We love the South. And we've had a lot of success year-round, not just during the summer months.
Now, the whole time when Steve was running the place, the occupancy rate is always just incredibly high. What is the right level? I mean, I think someone might say, oh, they're not 100%, I don't want that. I don't want 100% because if someone comes along who's really big, I want to have room for them. But what's the right occupancy level? Because I know you can determine that yourself.
Well, that's right. I mean, frictional vacancy is critical, and we try to fill it with temporary leases. When we have a temporary tenant in the space, that gives us control. It gives us the opportunity to get that space back if we want to re-merchandise and bring in another tenant. You know, so we've been repurposing a lot of that temp tenant, raising our permanent occupancy base, but more importantly, every year leases roll. We have renewals every single year, and that's a great opportunity and a good source for us to grow the portfolio, keep on bringing in fresh tenants, keep on constantly recycling older, less productive tenants with newer and more productive tenants that also draw in a younger customer, a customer that comes and shops us more frequently, and more importantly, they spend more money when they're there.
But Stephen, also, this is something I didn't know. I have a background in retail. I did not know this. There are companies that like to use a store to see if it works, and if it works, they'll build out. I mean, that's actually happening experimental?
Well, we think that there's a lot of barriers to entry for a lot of brands to get into the outlet space. You don't know when you open your first outlet store if you've got 10 weeks or 10 years worth of excess inventory. So we like to work with a lot of these retailers to give them the opportunity to try essentially before they buy. We call them pop-ups, and a lot of the pop-ups that we've done, here's a couple of brands that we've popped up that have been pretty good success stories. UGG, Lululemon, Vineyard Vines, just to name a few, but now they have stores across our portfolio.
Okay, if you had told me that Huntsville was the Rocket City, I mean, look, Huntsville, frankly, I had no idea that there'd be an 825,000 square foot air life. I mean, I'm missing something here. There's a lot of us who are missing, but what parts of the country are next?
Well, I think that that's important. You know, the part that you're missing is the part that there's these secondary markets that since COVID, people are now moving into different geographies.
This is it.
A lot of people are moving out of cities. They're looking for secondary markets, places for them to live. tax rates are a lot better. The business climate is a lot better for a lot of folks. People are working out of their homes or just moving into these communities, and they're growing. And they're growing in leaps and bounds. So here you have Huntsville, which has always been known as Rocket City.
Right.
NASA has a community there. What we're finding is that the residential population is outsized and growing really quickly as well.
And then one of the things, of course, we have to focus on, the Fed keeps raising rates. I am not seeing the kind of slowdown. Look, they want to stop inflation, but they don't want to stop economic growth. The state of the consumer is pretty strong.
Well, we're seeing that too. And we see sales are continuing to happen in our portfolio. But more importantly, we're on sale every day. Right. So, regardless of the economic headwinds, and what Mr. Tanger likes to say, but regardless of the economic headwinds,
in good times,
there's always a customer that's always willing to shop out. The quality of the product is very good. It's the brands people love, and you can't beat the prices every single day.
All right, so I'm leaving. Should I tell my wife the Nashville trip? The next ladies' trip is to Huntsville? Is that the way it's working?
I think that would work. She could go Huntsville or Asheville. Either one. We're happy.
I learned a lot from you.
Anyway.
I mean, it was always when I was going, it was always New Orleans or nothing. These are much cooler cities. Well, I've got to tell you, you have taught me a great deal, and I am just so impressed by the stocks movement. It was no secret that it would go up. I just didn't know it would be this much of a rocket like Huntsville. Stephen Yalof is the CEO of Tanger. This is one great stock. Mad Money's back here.
Coming up, Cramer takes your calls, and the sky's the limit. It's a fast-fire lightning round. Next. Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.